Good morning everybody, it's Chris here from Serene Education with the 4 majors and notes update for the 3rd of November 2011. Hi guys, hope you had a fantastic trading day yesterday. Let's have a look and see what's been happening overnight going into today. Let's have a look as we head towards that all important non-farm payroll this Friday. Tomorrow, long weekend from myself and Nikki. We don't trade non-farm payroll, we give that to the markets. But there's other things than non-farm payroll, and that is Greece. A referendum, can you believe it? The government has decided to let the people decide on the bailout facility, proving it as he likes to do, as he mentioned. And this has really got a lot of people in Europe, including the two big boys, France and Germany, really raffled. And it's shown. It's really shown. We saw yesterday very indecisive trading day. Apologies. And this morning on the Asian market didn't go down. Didn't sit too well with the Asian market. And sure enough, we've seen price reversing to the downside. In doing so, we have been testing this prior support and resistance here at 13,750. Quite a lot of support through here, and a bit of hesitation back in September. But going through that, breaking lower, and then we had a hesitation above it. Price rallying slightly, not very decisive, still below the two small trading ranges, the 20 and 50. And in doing so this morning on the Asian market, we've seen price rally to the downside. This is primarily coming off the back that the Greek government wants to put the vote to the local people about the next or the bailout facility being put forward by Eurozone, and it hasn't stuck well because they're probably thinking, a lot of people seem to think that if they do that, then the locals or the public will just vote no, which would mean that Euro would fail. They would simply, obviously, walk away from Euro, and that would cause a huge landslide effect across Europe, which would be felt globally. That would give any reason for Portugal and the other ones like Portugal, Ireland, and then we have the two other ones that are rearing their heads in the background. That's Italy and Spain. If they had to do that, then they would potentially put Portugal and Ireland in a position where they would say, well, let's walk away from the two because we just cannot afford to be in it. We cannot afford, well, we can't afford to pay back the debt. It's just too great, and we'll do exactly the same. So that would lead to the euro pretty much collapsing, which would cause a massive domino effect globally. So, yeah, I think they had an emergency meeting yesterday. The Sarkozy and Merkel got hold of the Greek government. I think they had an emergency meeting yesterday. I've not seen what the news has been like, but looking at the Asian markets move this morning, it clearly looks like we are seeing this news really starting to take effect now globally. So where does it leave us? Well, you can see now on the daily, we were blue. CTC was blue for a long period of time. We have broken through this price support and resistance, and we're heading lower as it stands now. We're heading towards those 13,600 where the prior bounce took place. A lot of wicks at this area at 13,600, or even before that at the 13,600. But ultimately we got another support, a noticeable support at the 13,600, and that's where price would like to go. That's what would probably put our next target. Below that would be 13,400. And ultimately way back down here at the last bounce we had at 13, just below the 13,200 mark. So there's three noticeable areas of target areas to the downside as price moves lower. This and then CTC is starting to show some sort of momentum to the downside. However, if you look at the daily, we're still with the blue, and it's quite mixed match. So there is an indecision on the daily time frame. We have to go intraday to see a lot of that negativity that's popping up, and you can see it primarily on our 4-hour, that massive downside candle. We saw a bounce over the past couple of days, but going into the Asian session, we've seen those the lows of yesterday being reattempted, and we're heading towards, if we can get through that institution moving average, then we could be looking at potentially 13,600 overall being the next potential target on our 4-hour. The hourly is giving us the same indication. Red, look at that, beautiful crossover, break of a price of one resistance level. That at that time frame, you can see noticeably that those highs failed to stack up, and then we saw the momentum drive lower highs depicting price action to the downside, and then ultimately we saw a bit of bouncing through here, so that would have been a price support, and then we saw this bearish engulfing really showing us momentum drive, and since then we've been to the downside. However, we saw a bounce, so we have to put that in at 13,6,500, just below 13,6,500. We saw a bounce, and notice a second one, and price rallied. That rally failed to materialize above a price of one resistance here, just below the 1385, 8,300 mark. And we saw a definite indication yesterday, or late yesterday, of indecision and potential for bearishness to creep in, as we saw these shooting stars and these inverted hammers here at the top of a trend and the resistance. And sure enough, we had a bearish engulfing to confirm that. Slight pullback, but a continuation down to the prior lows, and that's heading back towards 3600, 13,6,500 for now. Slight pause over the Asian session, but as it stands now, it looks quite likely that we could be testing 13,6,500 or 13,600 quite soon, as price reverts to the downside, as that news trickles through that Greece would like to put the next bailout funding, or the bailout funding for Greece, to the local people to vote on. So we know what the sentiment's like for the locals. They don't really particularly want to be in this mess, and is more likely, if he does do that, then the public might vote no. So this is what's happening at the moment now. The fundamental side of it, Greece referendum, technical side, all looking bearish at the moment. Next up is sterling against US dollar. Let's have a look at the daily. Yesterday, long trading wick. We saw a lot of upside movement yesterday after a bearish candle the previous day. However, price closing lower as the news came out that the Greek government were thinking of having a referendum. So same effect on euro, and it's taken us through a price support and resistance at the 15,9,500 mark. Price support quite clearly through there, and through the latter part of October we saw bearish engulfing, cancelling all that that upside movement, since we failed to break above the highs at 16,500 at the institution moving average. Price trading this morning as the Asian close and European session open, we're trading below 1595, which happens to be price support. If we can find price staying below this area, then ultimately we should be looking at the next level of potential price of support and resistance here at roughly the just above the 15,800 mark. Below that we could be looking at 15,700, and we've had some price action just below the 1555, or just above 1555, but ultimately way back down here at 15,3,500, which happens to be price support and resistance on this daily time frame, because we had a noticeable bounce here back in December and September of last year. So as things are happening now, you can see this upside drive, the swings, the trend line to the upside being breached on this time frame, and done so with this bearish engulfing here, failing to find a bounce higher and a close above the trend line to see the 16,1500 being reattempted, failing to find support above that area and closing lower, and subsequently bearish sentiment creeping in. So CDC for the daily is still looking bullish, but as time goes on, we'll notice that the actual CDC will start to reflect that as we head lower. We're still trading above the 20 period moving average on this time frame. You can see quite clearly there happens to be a support at that level, so ideally we'd like to see a break and close lower than that. That would probably be roughly around the 1586, 8700 mark. Break below that, we'll definitely see the next area here at 1580 be retested. So let's have a look intraday. Lower swings depicting price action to the downside. If we took the high here and drew a fib projection level, we're testing the 61.8 fib here at the 15,700 mark. Got a break below that. You can see that price is testing the underside of price support here. If you can find a resistance at this level here at the 50% mark, at what are we looking at there? Let's have a look. That is 15,900. So if we can find resistance at that level, then what we're going to do is see a continuation lower, and ultimately trend direction dictates that we should be seeing price moving in this direction, and ultimately we're looking at 100% down here at 1575, 1577ish, that thereabouts, which will bring us back to these prior consolidation resistance areas we saw not so long ago, just where 15,700 on the daily, which is quite a strong support and resistance level. So you can see quite clearly, and we are moving lower. to the downside. CTC has matched our has now given us a sell signal. So importantly, first thing that's got to happen is 5900 has to stay in play. It's got to remain as resistance above us. So looking at our 4-hour time frame, let's make this nice and dark green. So as we stand now, he's got to say, listen, yeah, if this is to remain bearish, we do need to see price failing at this level here. So it's consolidating in the upper side of the bandwidth. However, we see price failing to find support at this level, and a bearish engulfing candle there again forms, then ultimately we should be looking for further continuations lower. So if you look at that, you can see this morning price testing the lows that we saw yesterday and failing. There we go, 5900 low nose is a price support and resistance level. You look at the 30-minute chart, for example, trading on the underside of that price support. Now, could this be a indication of resistance, and we should see a continuation lower for the remainder of today. US dollar Swiss franc is the next one on. Let's have a look. This price very, very interesting. Last couple of days we've seen price pulling back to the 8600 mark, which happens to be the 1.2 or 120 on the euro against Swiss franc, which happens to be the peg area. And you can see here exactly the same thing. We saw price pulling back to 86, and yesterday, in the past couple of days, we've seen price pulling back and testing that area, and in doing so, we saw a massive bounce to the upside, even though we had a bearish engulfing candle going into that trading day. Because psychologically, I think if they had known that 86 would have been breached, then there's a possibility that the Swiss government would have re-intervened to push the price higher, to keep price above the 120, which would be the 86 on this particular chart. So we see price bouncing higher, and in doing so, retesting prior support and resistance levels to the upside. Noticeably this one over here, where you can see prior resistance in the past, early September, prior support here through the mid-October range and the break lower. So we're testing these highs here. Price failing to rally higher yesterday. Very small trading range. You can quite clearly see long wick to the upside on this candle before that. We do need to see price trading above the 8900 mark to see any further extensions higher. At the moment now, the 20 period is in the way. However, the 50 and 200 are both below, and 50 is still moving to the upside. So we do need to see a break higher. Ideally a break above yesterday's high would definitely confirm that we should be looking for upside movement, as this downtrend has now been breached. So if we can see momentum driving higher on that, then we could see potentially for price to head higher and to test the 900 mark, and ultimately way up here at the 930 mark that we've seen quite recently. Intraday, let's have a look at that. So we know the 8900 happens to be a resistance level. So let's put that in. You can quite clearly see that price failed here, and we're seeing price actually moving slightly higher, but you can see quite noticeably the highs are depicting that we should be seeing a potential consolidation at this range. And you can see the CTCs in our favor, and break and close higher than 89 would definitely give us room for more further movements to at least the 89.60, the prior higher that we've seen just recently. Above that would see price moving to the previous ones here, noticeably way up here with the institution at 89, the 89.60. So as we go back to the hourly, 89.60 will take us back to the institution moving average where price failed before. So nice little scope of a trade here. We see a break and close higher than the 88.90 in this time frame. Notice the hourly candle as we speak now, a lot happening at the bottom of the wick at a resistance level. It remains to see how long we still have on this candle. Let's have a quick look. This candle will close at 8 a.m. GMT, which gives us another, what are we looking at here? Another 16 minutes for this candle. So a lot can happen in 16 minutes. If we fail here, then ultimately we could be seeing a potential pullback or consolidation before we see a breakout. But as long as it stays, or it keeps making higher highs and retests this resistance here at 88.90, then we could potentially be seeing a price breakout soon with a momentum to the upside continuation. Last pair of the day is US dollar Japanese yen. Let's have a look. Quite clearly seen the intervention from the Japanese government just recently. It's very good. It's very important to note that if you take a fib retracement of this particular candle, this massive candle here, you'll notice that price over the past 2 days has still warranted to close and trade higher than 38.2. So that's great. So that we can look at that as a measure stick and say, well, if price is still trading about 38.2 continuously, then there's more likely for a potential bounce higher. Because with this massive move to the upside, you tend to find a massive pullback. This pullback, we have seen a noticeable pullback, but it hasn't pulled lower than 38.2. So this is now psychologically a potential support. If we can see price bouncing on here, forming a nice bullish engulfing or hammer of some sort, then we could be looking at upside favorable to at least back up to the 79.50 where we've just come from, and that'll take us back to the institution moving average. So let's use that as a yardstick. So if you look at the 38.2 on the daily, which is the 77, what are we looking at? 77.95. So great. We look at our intraday time frames. Let's look at the hourly, for example. 77.95. There we go. You can see quite clearly price really just plateauing, not doing a hell of a lot above this. Look at this trading range. It's absolutely crazy, flat as a pancake. So, but as long as it stays above there, then it gives us potential for further upside movements. You can see the moving average here, the institution moving average. This little speck of here, I need to work on the amount of data my charts are loading, but you can quite clearly see the moving average, institution moving average still below us and still playing. You can see both the smaller time frame moving averages flat, so telling us that price actually not really moving that much. But if you can see price rallying on this or finding support and really bouncing high with a bullish engulfing, then ultimately our next target would be up here at the 794, 795 mark, and ultimately way up at 80 where we had the major support and resistance level not so long ago. So this one over here, if it breaks below the this 77.95 mark, then what we could potentially do is look at the previous fib retracement areas. So we know that 38.2 here is where price is trading at the moment, but then we look at 50 as a potential target, 77.50. Failure to find support there, then 61.8 fib retracement at 7700, which happens to be previously we had support and resistance on this pair at 7700 being our second target, and a break below that. And a break below the institution moving average, as you can clearly see, would take us way back down to our breakout, or our lows that we saw at 75.50. That's it, guys. That's all we got on this particular pair. I hope you have a fantastic trading day. Please be aware, today is Thursday. There is a hell of a lot of news in the next couple of days. We've got unemployment claims this afternoon, 12:30 p.m. GMT. We've got Merv King speaking this morning in Sterling at 9:45 a.m. GMT. We got this afternoon, as I mentioned, unemployment claims for US. We have prelim non-farm production quarter-on-quarter figures, expecting a rise, which is quite interesting. Prelim unit labor costs quarter-on-quarter, with expecting a low. Then this afternoon we have the interest rates minimum bid rate for euro at 12:45 p.m. GMT. There's word going on. We might see a cut on that. At the moment now, it's 1.5%. Hasn't been changed in a while. Some people say we might see it lowered. They're forecasting a no change, so it'll be interesting. If it does come out less than that, we could see things really kicking off. And what else do we have? We have the ECB press conference. We do have G20 meetings all day today, so everything on everybody's mind is pretty much Greece. Their call to actually hold a referendum. So it's going to be interesting because tomorrow is non-farm payroll. US side, and yeah, there's 2 days of a lot of news, so be aware. We're going to see a lot of volatility in the market, especially with Greece. G20 meeting today, I guarantee you 95% of it's going to be on Greece, etc. And there's also going to be potential to see if China, if they can actually get China to invest. Well, China's not really going to just jump into things. They will obviously want to see that Greece is one to stay, and they're going to try and see if it can actually stop with the referendum. I don't think the Chinese will jump into the euro if the Greeks actually bail out, because it'll just be too much negativity. So, loads happening, guys. There's going to be a lot of fundamental news coming out the next couple of days. Be aware of it. We're going to see a lot of volatility on the charts. Just please be aware. We're going to be able to, I don't want you guys trading only to find that you're trading in the middle of volatility. You could risk a lot of your account details by doing that. So, if you're not in any trades, rather stand aside, let's see what happens end of tomorrow, and then get a clearer picture going into Monday next week. Until then, trade serenely.